Well, if we look at the housing market in particular, there's no doubt that there's parts of the market where the prices have moved ahead quite strongly, and particularly Victoria and Melbourne in particular in Victoria. But I think that it has been patchy. But there is obviously concern, and the Reserve Bank has obviously got concerns about property prices, and certainly I think that's just an added impetus for them to continue to increase the official cash rate.
Mm-hmm. And what about interest rates, say, in June or sometime, or how are we going to finish the year? How about that? Some are saying maybe 5%, 6% if the RBA is really aggressive.
Well, I think there's no doubt that we'll see a continuation of increasing rates. It's hard to guesstimate exactly how many interest rate rises there will be, but I think that a level around 5% is probably not going to be too far off the mark.
And how about how that's been translated to mortgage rates? Because there's been obviously a lot of political commentary, shall we say, criticism on Australia's national banks that really you haven't been keeping in line with what the central bank has been doing with interest rates. Some would say you've been gouging your customers. How do you respond to those sort of complaints?
The OCR is unfortunately not quite as an effective tool as it was prior to the global financial crisis, because we've seen a significant increase in the cost of wholesale funding as a result of the crisis, and so therefore we've had a situation that on the way down banks were not able to pass on as much of the decrease as they could because of that funding pressure, and likewise as rates go up there has been a requirement to pass on a little more. But I think the situation at the moment is that we're probably reasonably balanced, but there's no doubt that we're going to see an ongoing pressure on funding costs, because as we roll off cheaper funding, we're replacing it with more expensive funding.
And what do you think about these other bank moves coming from your rivals, such as ANZ, buying up RBS assets? There was a struggle for AXA Asia Pac with NAB being involved. This doesn't want to lure you into the game at all? Maybe you should be expanding since you have a lot of cash in your books?
Well, certainly, it's very easy to get seduced into buying assets. I mean, a lot of chief executives think that the deal's done once they sign the cheque. My view is that the value is never achieved until you've actually executed successfully. And execution risk is always there, and it doesn't pay to saddle your shareholders with acquisitions that are bought at too expensive a cost. So my view is always about making sure that acquisitions are bought on the basis of value, and that you're actually going to generate good shareholder value. I don't see much point in what I call strategic acquisitions, which is always a code for paying too much. And if you look at acquisitions, in general, 80% of them are the benefit of the acquiree rather than the benefit of the acquirer. So I think that all very easy to get carried away in a race to acquire assets, but in the end, it's about making sensible decisions and buying things that make sense.